Hi, everyone. Welcome to the 20th live stream sessions. I'm Rachel. I'm your host today. I'm sure one of the most discussed topics these days revolves around Bitcoin deep below 100K. And the golden question is, was it just a reaction to Trump's tariff or something more significant is happening behind the scenes? And of course, we'll dive into the alt season, deciphering the myth if alt season is finally here or has this cycle changed the rule. The live stream is available on both Bybit app and also on Bybit web. But for the best interactions, please join us on Bybit web as we answer your voting question in real time. So as usual, before we start, please take note that we'll be doing 2 rounds of red packet giveaway today. One for our existing users and also for our new users. You can stand a chance to win $500 USDT trading bonuses. Please be sure to claim your rewards whenever the red packet pop up on the screen. So sign up now to get ahead of the game while you are at it, and like the video, share the stream, and let's get started. So yes, now let's welcome our 3 incredible panelists who will be joining us to share their insights with us. So we heard your feedback for requesting blog shows to actually join our live streams, and we're actually great to invite them here today to share more about their current market sentiment. And we are very happy to let's welcome Edmund, the founder of and CEO of Blog Shows.
Hi, good morning, and thank you for having me.
Hi, Edmund. It's great to have you with us again. Could you please just introduce to our audiences and share a little bit of what you do?
Sure. Thank you once again. So my name is Eamon. I'm the CEO of Block Shoals. At Block Shoals, we focus on delivering insight for digital assets by providing research and analytics. We have a heavy focus towards derivatives, but we cover the market overall.
Yes, perfect. Thank you for the introduction. So great to have you again on this live stream. And next up, we have Andrew, the head of research at Block Shows. Hey, Andrew.
Hi, good to see you. Yes, head of research at Block Shoals. So I'm covering a lot of the derivatives trading research and insight that we're putting together. As Eamon mentioned, we have a big focus on derivatives, but also looking at crypto and altcoins as a much wider space, even those without derivatives. So very excited to be back.
Awesome. We are really happy to work with you guys as well. As you guys know, Bybit actually produced quite a lot of reports and is actually partnering with Blog Shows as well. So it's great to have you guys with us today to share more about insights about the market sentiments. And lastly, we also have Benny from Bybit. Hello, Benny.
Hello. Nice to be here. Thanks for having me. Hi, Benny here. I'm the retail trading lead in Bybit. I'm in charge of the trading experience for the Bybit app, both on your desktop as well as your mobile platform. Hi.
Perfect. Thank you. Super excited to hear what you guys have. Just a reminder for everyone, for those of you who are just tuning in, I was just sharing that we are doing 2 rounds of red packet giveaway today, and one for our new users and one for our existing users. So for the first round, we are giving away 10 USDT trading bonuses to 25 new users. All you need to do is sign up for a Bybit account during the live stream to stand a chance to win. For the second round, we are giving away another 10 USDT trading bonuses to 25 existing users. And all you have to do is trade at least $100 USDT during the live stream and stand a chance to win. Okay, so let's get started. So actually, we've seen Bitcoin tumble below 100K recently, and it seems like Trump's new tariffs on import from Canada and Mexico and China have shaken things up, not just in the traditional markets, but also in the crypto. Now, Bitcoin has just been seen as digital gold and a safe haven during uncertain times. But the way it's reacting lately makes you wonder, has the narrative changed? Are we seeing short-term dip, or could this be the start of something bigger? So let's starting with the first topic, and we wanted to ask about Trump's tariff. This new import taxes seems to have rattled the market pretty hard. Bitcoin dipped below 100K, which caught a lot of people off guard. Do you think this reaction is justified, or the market is overreacting to the news? Maybe we'll start with Benny. What do you think?
Sure, thanks for the question. So first of all, I think we need to really define what overreacting means. So let's put things into perspective, right? We've had worse sell-offs in the past. In 2017, the China regulatory crackdown, we had about 30 to 40%. Back in 2022, FTX collapse, we had about 20 to 30%. And at each time, whenever there's a quantitative tightening, we see the market pull back by about 40 to 50%. So at the first week of February, when we had a 9% drop from 100 to 91, I think that it's not unheard of. So if we want to call it an overreaction, I think we need to caveat of what exactly this means. Now, what's more interesting on a macro scale is the growing correlation between BTC and other risk-on assets like your tech stocks. Now, if you buy this hypothesis, then this drop is really a market collaboration by the institutions. Now, do consider that the hedge funds are also making a play here, right? Now that we have a pro-crypto US government in place. So this sell-off could really be just an offloading of risk by the hedge funds. So yeah, short-term overreaction, perhaps, but it's completely justified at the macro level.
Right. Thank you, Benny. That's really very fascinating point. I think it's a good call out, like, what do you mean by overreacting, right? It's great evaluation if we look into it. But what about you, Edmund? I mean, I'm sure the audience is very curious to hear from you as well.
Yeah, sure. Look, exactly as you guys already alluded to, we have to kind of be a little bit careful in reading too much into short-term moves in the market and trying to kind of from those dictate what the medium-term trends would be. I think, historically, Bitcoin has had a very strong correlation with risky assets, especially US equity indices. And as such, when you have a sell-off or a correction on those, it's very difficult for Bitcoin to kind of be immune. And as such, we get a similar reaction and it becomes viewed as a near-term risky asset, Bitcoin, rather than an inflation hedge. What's interesting this time around, however, there's a lot of Bitcoin-specific factors that are more tailwind and they are supportive of more a bullish environment for Bitcoin, whilst the macro setup, including what Trump is delivering on the tariff state, seems to be a bit of a headwind. And for me, that's quite interesting and might lead to potentially the correlation breaking down between Bitcoin and risky assets versus what we've seen in the past. If we just think about some of the sell-offs that we mentioned, including, the FTX related sell-off, at that time, we didn't have the supply-demand argument that is pushing for more bullish Bitcoin, which we have this time around. The post-halving is supporting the supply side. There's less is being produced. And on the demand side, we've seen this massive a bid for Bitcoin from large institutions, be it via the ETF or what MicroStrategy is doing. We didn't have that in the previous cycles. So supply and demand is supportive of Bitcoin. And then you have the regulatory environment as well. If we think about what happened in 2022, we had the SEC going aggressively after the ecosystem. This time around, not only that we don't have that, but we have the opposite, which is a much more crypto-friendly environment, not only in the US, but globally. So these are massively bullish factors. But of course, the macro environment tends to be a bit of a headwind. So what does that mean in our view? Well, it just means that we might get near-term volatility where Bitcoin has to kind of follow equity. But the fact that we're struggling to sell off too much, it just shows me that the other factors are providing a bit of a floor. but also just means that medium term, we will still see Bitcoin kind of delivering that inflation hedge that you need. So yes, if you're going to look at it week by week or month by month, it's not going to look like it's a fantastic hedge for spot inflation. But I'm pretty sure if you look at it over a year or 2 year horizon, you will still see Bitcoin has been a good hedge for inflation, except with a bit of volatility, if that makes sense.
Right, totally makes sense actually. Then speaking of which, how does it actually relate to the fact that Bitcoin is actually being used widely as a hedge against inflation and also economy instability? But when the gold markets get so shaky, we still see Bitcoin taking hits like this. I mean, and then do you think Bitcoin is still like what they claim as the digital gold that we have always talked about, or is it starting to behave more like a risky tech stock?
Yeah, exactly. This is kind of like the point I was just alluding to at the end of the last answer I just gave. I still think, Bitcoin will still hold that position as potentially a good store of value and a good hedge against inflation. And I think, especially over a much longer horizons, and I'm talking about even 5-10 years horizon, and also over the medium term as well. So I still think Bitcoin will continue to hold that status. However, in the very near term, I think its correlation with equity will dominate the immediate moves. So what does the two things mean when you add them together? You just get like near-term volatility and long-term trend, right? So you most likely have a similar trend that we've seen in the past when there is any kind of risk of inflation. But around this trend, you're going to get a lot of volatility because every now and then you get perhaps bad moves in equity markets, and that will lead to Bitcoin actually following. The other thing I would highlight is that in terms of the correlation of Bitcoin with tech stocks, etc., I think that that relationship might actually break over the very near term. Mainly because I feel that Bitcoin is not exposed to some of the elements that impact those stocks, be it their exposure to other market trends related to AI, or be it the health of their balance sheets if interest rates go up. A lot of some of these organizations have obviously levered positions, and higher interest rates harms their equity present values and returns on their investments. Bitcoin, to some certain extent, is kind of hedged or not necessarily exposed to these kind of things. So I think, given that the other driving factors that is pointing to a bullish environment, as I mentioned, we might see in the near term those factors taken over, and the relationship with equities kind of taking a back seat, and we see this kind of decorrelation where we might find ourselves in a position where Bitcoin specifically could rally while the rest of the market is not having as much fun.
Right, thanks. But actually, now that looking at the institutional investor, they've got like a huge influence of how Bitcoin moves this day. We know like ETF bought in a lot of big players. Are these institutions starting to pull back because of tariffs, or are they positioning on their next? Yeah, Edmund, do you want to continue?
Sorry, say that again. I missed the last bit of your question.
So, okay, no problem. As I was saying, like, ETF brought in a lot of big players, and are these institutions starting to pull back because of the tariffs, or are they just repositioning their next move?
I think it's very hard to say. We don't have enough data. It's only been kind of literally a few weeks. It is crazy to think that it's only February in this year, and there's so much has happened already. So I don't think we have enough data to make strong conclusions. What I think is happening in the ETF space is that first we had the massive inflows, which is all pent up inflows that was waiting for the approval, and we had that. And then now I think we get into a stage where it started to behave slightly like a more mature ETF, where it will be somewhat diverse or diversified inflows. You will have folks that will decide to underweight versus the index. You will have folks that would like to add. You will have folks that are new into the market. Some folks will decide to exit the position altogether. And you're going to have like these periods of volatility. What would be very interesting in terms of the ETF inflows is the quality of the buyer. If we start to see much more what I call sticky money buying into these ETFs, i.e. pension funds allocating a certain percentage of their AUM to the ETF, etc., that money is very sticky. It doesn't go in easily and it doesn't leave easily. Versus, more speculative money that is using the ETF against equity. So hedge funds are just trading, for example, Bitcoin versus MicroStrategy, etc., etc. That money or that institutional flow is very volatile, and it could distort the view in the near term. So I think to have a much more concrete view on the institutional inflows to the ETFs, you probably would need a slightly longer period of time or a bigger data set. What I would say is that what's happening in MicroStrategy, in my view, is a stronger indicator of the institutional flow. Because in my view, a lot of the steps that they take, because they are a public company, requires a lot of preparation and a very well thought decision about something that they are looking to do over a medium term, rather than just a quick buying into Bitcoin and selling it tomorrow. And when folks like them, start to accelerate that strategy that they already decided to embark on, for me, that's an indication that the institutional side of the ecosystem is actually maturing and gaining momentum. And the fact that large asset managers like BlackRock acquiring a very large percentage or a significant percentage in MicroStrategy, that's also very telling. That in terms of medium term, what these large institutions have decided to embark on, the trend continues. So I will treat the inflow data specifically into Bitcoin with a pinch of salt in terms of the immediate money coming in or money leaving, because I think there's a lot of factors that distorted the numbers. But just look deeper and look at the quality of the buyer. And when you start to get more sticky money, those are the ones that you probably want to rely on in making a conclusion whether they're buying or selling, if that makes sense.
Right. That's super insightful, actually. But can we zoom out a little bit? So, I mean, Bitcoin has survived plenty of macroeconomic storms before, whether it's trade wars or regulatory crackdowns. But how does this current situation compare to the past events? Is this just another bump in the road, or are we in the uncharted territory? But maybe Andrew can share a little bit more insights on this one.
Yeah, of course. Crypto is just that train that keeps rolling, right? This is not the first bump in the road that crypto has been through. But as Eamon very rightly said, I think that this is not 2022. Yes, we have macro headwinds being buffeting around, but like in 2022, the confluence of other factors really pushing from behind as tailwinds for crypto. So be that the halving event that we had in April, which has historically been very bullish for Bitcoin, or whether that is this new inflow of demand that I think is still being tapped into from institutions. And not just institutions, but pension funds, corporates looking to add Bitcoin to their treasury strategy, all of this kind of stuff. I think this is not the first bump in the road. And all of these events, alongside the absolutely incredible, positively revolutionary policy in the US, I think really marks this cycle out as not exactly like 2022. I think, as Eamon rightly said, correlation with equities has come and gone for crypto. We first saw it in big size in 2020, following the COVID crash. But then it went away a little bit during the hiking cycle. But since, I would say, maybe around 2024, the beginning of 2024, coinciding with the launch of these ETFs, we've seen that correlation come back in a really big way. So not just tech stocks either. Bitcoin's really moving alongside quite a lot of the S&P, not just the Magnificent Seven, but all of the other mid caps as well. So the way that's manifesting is far more as a reaction to volatile events. So we've been looking at this over January, in particular on several weekends in January, whereas before crypto was a 24/7 asset. It seems like now volatility volumes are much higher during trading hours. That to me is a sign that people are active or at desk or trading crypto very much alongside a lot of other asset classes. So I think this is what has been driving that correlation in the short term. But as Eamon rightly mentioned, we see several tailwinds that mean that this correlation could break over the medium term.
All right, cool. What about you, Benny?
Yeah, similar sentiments as well. I mean, I'd be lying to say that this is Bitcoin's first ride, right? Every time Bitcoin weathered these storms, perhaps with a huge drawdown, moderate drawdown, there'll be followed by a consolidation, and eventually there'll be a rally. Now, so on those grounds, I'd argue that this is not uncharted territory. But the thing I want to add is that in today's landscape, there is a heightened institutions involvement. All right, we know from BlackRock, from Fidelity, from Strategy, and also in this liquidity, there's actually a lower supply for the sell side. So what this means is that these are all characteristics that define a territory that I think that if we were to have a pullback, I think that it will be well supported, a lot of it by the institutions. Yeah, that's it.
Right. I actually do agree. But actually some people are saying that this is just the start of a broader correction, or maybe even the beginning of a bear market. But others think that maybe it's just a quick dip. What's your take? Are we looking at just like a temporary pullback, or should traders be a little bit more cautious right now? Andrew?
Yes. Like Eamon said, I think far too early to call it. I think what we're sharing is that we see a lot of factors which support the price beyond the headline macro events. So if I make the comparison again to 2022, in that case, maybe I'll talk a little bit more about the headwinds Bitcoin faced there. Yes, like now, we had some macro headwinds and slightly less of a correlation to equities. But I think a lot of other events, including the Celsius crash, Luna, and obviously the FTX crash in November of 2022, all of this alongside a regulatory environment in the US, which was a complete night and day to what we see at the moment. So I think we'll touch on this a little bit later, but this regulatory environment, I think, is not just positive for Bitcoin, although Bitcoin has been seeing the lion's share of the attention. I think Bitcoin is the one that has been named as a potential asset for strategic reserve. Bitcoin is the one that had a conference where Trump spoke in July of last year. But if we think about a lot of the reasons that this administration will be positive for crypto, I think a lot of those are very much directed at altcoins with fundamentals. So think of tokens that have either previously come under a little bit of pressure from the SEC, which is now completely changed given the slightly friendlier administration that's been installed. Or think of those which have thriving developer ecosystems, which have now unlocked a whole pool of talent in the US. There's no longer that career risk to go and work on decentralized finance or Web3 gaming. That unlocks a completely different paradigm, I think. So bringing it back to your question, is this just a temporary pullback? I think it's far too early to say, but we have, I think, a lot to distinguish this cycle from previous macro-inspired pullbacks.
Right. Okay. We actually seen quite a lot of retail panic selling before, especially when the market takes like a sudden dip, like currently. But institutions play a huge role as well. So Benny, do you think this recent sell-off was more about retail traders getting scared, or other big players making some strategic moves over here?
I think it's really a bit of both. You can't really just have one without the other. So if you look at like on-chain flows or like social sentiments on like x.com, I think the bulk of the sell-off from the retail side is mainly driven due to emotional rather than anything strong, anything fundamental. And if you look at the institution side, both the institutions and whale activity, I think that these are all positioned moves. All right. So as you had asked me in the first question about institutions' involvement and ETFs, I think that now that we can, if we expect more institutions to be in, you're gonna consider that a lot of the movements can be caused by a rebalancing of their books or hedging or trading or just off risking. So I think that this time around, it's really no different from others. The only slight catch is that now I think there's more, as what Eamon call it, there's more sticky money in here. I think that the money that flows in, I think they're more likely to stick rather than being withdrawn. So what this means is that if they're buying on spot, I think there's more of a bullish pressure.
Okay, cool. Thanks so much, guys, for sharing all of the insights. Can we just take a look at some of the questions that we have in our chat? Okay. Okay, we have one question from Yo Bites. How do you think tariffs will impact the price of Bitcoin in the long term? Do you have Eamon?
Yeah, sure. Well, it depends which tariffs. And in my mind, I actually think if you stop thinking about Bitcoin as a risky asset, and hence it will move with equities, and equities reacting badly to certain tariffs. If you think about it more as a currency, then you will actually see it moving perhaps in the same position as the dollar versus other currencies. So you might actually have a situation where the Bitcoin versus dollar stays at these levels, or it doesn't move too much, but then Bitcoin will just strengthen against all other currencies, versus the euro, versus sterling, versus the Canadian dollar, versus the Mexican peso. It depends on which country you're looking at. So it is a very complicated equation, actually, and it's not easy to navigate, especially for Bitcoin, because there are so many different driving factors. And to trying to just analyze one of these driving factors in isolation, you might get the move correct in the near term, but you might miss the bigger picture longer term. So in my mind, I know I'm not necessarily answering your question or giving you a straight answer that it's buy or sell, but actually, because it is a reflection of reality, I think most likely the balance of probability is skewed towards Bitcoin behaving like a currency when it comes to tariffs in the longer term. And if it's a situation where the tariffs are leading to stronger US dollars, we might see Bitcoin actually behaving in a similar fashion. The other thing that we need to keep in mind is that there is some interesting currency-related events that are happening elsewhere in the world that could mean a huge impact for Bitcoin, depending on how things unfold regarding the tariffs. But in certain countries we have like for example, China, yields are all-time lows. We have potentially the currency could weaken versus other currencies, and most likely versus Bitcoin. That could be quite substantial support for Bitcoin as an asset. So long story short, I think near term, very immediate term, Bitcoin will continue to react on the news or the announcements of the tariffs. But we will see what we've seen recently. It might negatively get impacted or sell off, and then you get this correction as the market filter through the news. Now, this sell-off and correction might start to lengthen in its window, and we might not get the correction immediately, and it might last for a few days or even a few weeks. But I am inclined to think that over the medium term, in relation to tariffs specifically, Bitcoin might actually be reacting to it as a currency versus acting to it as an equity, if that makes sense.
Right, totally makes sense actually. Let's take a look. I'm not sure we have more time, but let me see if we have any more questions. Okay, yes. I think we'll cover this question a little bit later as well, but I just want to shout out someone named SAB. How much longer do we need to watch the market before we can tell if the Bitcoin dip is just a short-term correction or a start of a bigger trend?
Happy to take
Benny?
that if you want. Oh, go ahead,
Yeah,
Penny.
sure.
Sorry.
Go ahead.
Yeah, I was just gonna say, it's the billion-dollar question, right? I think if we, as in my previous career as a trader, my ex-boss used to say to me, every trade is a good trade. It's all about timing. It all works at one point. But what I will say, jokes aside, is that you want to just look for certain triggers that will give you a clear confidence which way the market is going. All right. And I would say correlation with equity is the most important thing that I'm looking at. I think if Bitcoin continues to be closely correlated with equity, maybe we haven't seen the bottom yet, because I actually get a sense, as mentioned earlier on by Benny, that yields potentially are going higher, or this quantitative tightening that always bodes bad for equity, and hence Bitcoin could have another leg lower, etc., combined with some certain weak long positions liquidating, etc. But if the correlation with equity starts to break in an interesting and meaningful way, that is to me a very clear indicator that we probably are we've seen the dip, and now we might have a decent correction, mainly because of the other structural factors taking the driving seat, be it the supply demand or the regulatory environment globally. I mean, this whole idea that certain central banks around the world are trying to pass through the legislations to allow them to accumulate some Bitcoin is quite significant, right? And I don't think the market has already priced for that yet. A lot of these institutions are not necessarily price sensitive, right? They, first of all, the decision will be done for a very long horizon. They might be they seek the opportunity to buy when the market dips. But they're not necessarily waiting for a certain level. If they need to buy, they will just continue to accumulate. So all of these are major drivers, and we need to keep an eye on. But I think for the near term, and by that I mean few months, 3-4 months, I would keep an eye on the correlation with equities. If that starts to break, then yeah, I think we might be in for a next phase of bullish run.
Cool. Benny, is there anything you'd like to add on for that question?
No, I largely agree with that analysis. In fact, for myself, I'm more of a technical guy. I mean, my last job, I was a trader over one of the prop trading firms, and I think that one of the things that we want to look at, or at least for my trading team, is the pullback, right? So if you get a pullback at some key Fibonacci level and it bounces off that thing, and it proceeds to rarely pass the previous all-time high, I think to me that is also a good indication as well. But as Eamon has pointed out, I think that right now what we need to focus on as well is that correlation. And as one of your questions earlier is about like digital gold, whether you do treat this as digital gold or whether you treat this as a tech stock, I think that that is the defining moment when you see that the correlation decoupling, right? Which I think would largely be driven by things like regulatory events and things like quantitative easing and tightening as well. So I think that these are the key indicator as a trader you got to really pay attention to, because I think that would determine which part of the cycle you're really at, whether has it really bottomed in or is it going to continue going sideways for the next few months.
All right, cool. Actually, we talked a lot about Bitcoin, but let's just shift the gears a little bit. I mean, for the out season especially, is that the magical time when altcoin starts outperforming Bitcoin? And let's be honest, that's when the things get really exciting in the crypto world. I mean, historically, we've seen this happen after Bitcoin hits like a local high. Money starts flowing from Bitcoin into Ethereum and then into smaller coins, riskier projects. But this time around, things feel a little bit different. I mean, Bitcoin dominance is still high, and we haven't seen the usual capital rotation into altcoins. So what exactly is going on? Is the altcoin season got delayed, or is the cycle breaking all the rules? So to start with the first question, let's just kick it off with the basics on out season. Is it a term we throw around a lot, but what exactly defines an alt season? Andrew, do you want to take us on this one?
Yeah, absolutely. It's the key question, right? What do we mean by alt season? Generally, I think you know it by its impact. Historically, that has meant sustained outperformance of altcoins, so anything not Bitcoin, essentially, alongside Bitcoin. Now, historically, Bitcoin has not necessarily had to suffer for altcoins to rip like this. We've seen the case where people take profits sort of incrementally from Bitcoin local highs, and then speculate that traders are then recycling that capital into smaller, riskier projects. So historically, that has first been Ethereum, and then, like you said, large cap altcoins, and then slightly further down the risk curve to smaller names, which feel the benefit later. Then that continues for some period of time alongside Bitcoin performance, and then usually ends the bull cycle as we've known it in 2017 and 2021, with quite a significant pullback or a correction in those prices or those valuations. One way that we would like to sort of identify when this is the case, one trigger, one indicator we like to watch for this is Bitcoin dominance. By this, I just mean the percentage market cap of the total crypto market cap controlled by Bitcoin. So I'll share my screen as well. Essentially, what we mean by Bitcoin dominance is just the proportion controlled. So yeah, as we see here, historically, Bitcoin in orange here is very much the dominant force in crypto. But there are key points here where it does look like on an almost 4-year cycle, aligning with the bull runs and bear cycles, we see that capital begin to drop. Now, obviously, this is no guarantee this will continue. And I think that caveat I give is very relevant in the current cycle, where we have seen Bitcoin outperform and then the performance of altcoins outperform just after. So in this case, it was first Ethereum and then quite a lot of smaller names, large caps named at the top and then a lot smaller ones down below. Where we've seen that in the 2017 cycle and 2021 cycle, we are currently overdue that point. So the question of when alt season, when is this trigger going to happen? I think is very similar to the one asked by the audience in the previous section. How much longer do we need to wait to call this one is different. In terms of the capital floating around the crypto ecosystem, this cycle is already different. So if I scroll down a little bit and find, this is a chart of Bitcoin dominance around halving events. So Bitcoin dominance is that same percentage shown in the chart before. And then these are normalized to halving events. The last Bitcoin halving event was April 2024, April 19th. We are now significantly past that halving event. And given historical cycles, we are overdue that drop in Bitcoin dominance. So we are either overdue or it's about to precipitate. Whether or not that is the case this time around, this is the chart that we are watching to answer that question of whether this time is different.
Right. Cool. I think that's a really, really great insights. It's already covered in the report. I think users, whoever that's interested, can read about the report. I think our moderator will drop the link in the chat box. But speaking of which, why should traders even care about whether if we are in an altcoin season? Benny, do you want to share some insights?
Yeah. So I always view altcoin season to be like a good risk indicator, right? In the whole trading landscape. The better performing alts during the altcoin season, the more risk appetite traders generally have. Now, being able to recognize the phases within the altcoin season really allows you as a trader to adjust your allocations between, say, Bitcoin and alts. Now, historical data has shown that altcoins are characterized by market sentiments improvements, liquidity flows into the more speculative projects. So yes, if a trader has the risk appetite to grow their portfolio, then yes, I think that altcoin season is really an important indicator for the trader. Right? This is for you mainly to choose your portfolio allocation, and if you're running different strategies, to choose the types of strategies that you'll be running, whether it's bullish, bearish, long, shorts, or the different option strategies.
Right. So historically, we've seen like clear patterns, like Bitcoin rally first, and then Ethereum, and then finally for altcoins. But this time around, Bitcoin has been running the show longer than expected. Do you think we're still following that historical pattern, or has something shifted in the market dynamics? Maybe let's just start with, continue with Benny.
Yeah, sure. That's a good question. So I think what's mentioned earlier on by one of the speakers that I think traditionally Bitcoin leads the way and followed by Ethereum, and the other alts will then follow suit. I think that pattern generally holds water, but we see some deviation, right? For the last few weeks, we see that Ethereum seemed to be not really moving that much, despite Bitcoin and even the other alts, even like Solana, they have been moving quite generously. Now, institutional rebalancing is keeping the Bitcoin dominance high, right? Because of the ETFs and because of the government, U.S. government, which means that capital migration into altcoins, I think it's just going to take a little bit more longer this time around. That said, I think we're starting to see some early signs from projects like Solana, like Sui, that suggests that the rotation into alts is slowly creeping in. All right. So while Ethereum may be lagging for now, I think that as traders, you can keep an eye on things like your network usage, like your DEX volume across the board. I think that's your cue to identify what part of the alt season we're at.
Okay, cool, great advice. So actually, Ethereum has been the first alt to lead the charge, but it has been underperforming compared to Bitcoin and even other layer ones like Solana since September 2022. Andrew, why do you think ETH has been struggling so far? Can it still spot an altcoin season rally, or is the spotlight shifting somewhere else?
Yeah, very good question. This is something that's been very front of mind for Eamon and I over the last couple of months, I think, or even since the beginning of 2023. Like you said, Ethereum has been underperforming the rest of the market, but particularly Bitcoin since around that date. Now, this is not necessarily unusual during the sort of bear cycle, but as soon as we move into a bigger rip into Bitcoin price, historically we've seen Ethereum follow it alongside. And we saw that in the chart I showed a second ago. These things have generally moved together, and one positive move for Bitcoin has generally been positive for Ethereum. So one thing that we're speculating could be driving a lot of this is potentially the outperformance of other layer one smart contract enabled blockchains like Solana, like Sui. I think it is not a coincidence necessarily that since the election and since the middle of this year, those coins have been performing very well, while Ethereum has been losing a lot of market share there. If we think about a lot of those drivers pre-election that caused Solana to outperform, one I think was just an overdue recovery rally. But apart from that, I think a lot of the meme coin activity we saw in the third quarter and the first quarter of 2024, that is very well suited for a blockchain like Solana, which has far cheaper transaction fees, has higher transaction throughput. Both of these properties are very important for the type of trading that meme coins inspire. So meme coin trading activity is far less of a buy and hold for 20 years. This is far more of a shifting capital between narratives, almost on a manic scale. That is far more possible, I think, on Solana, given if Solana and other layer one blockchains, apart from Ethereum, given Ethereum's slightly more expensive fees. Now, Ethereum addressed a little bit of this earlier in 2024 and in 2023, attempting to shift a lot of activity to layer twos. And we've seen quite a lot of that activity shift to layer twos and away from Ethereum mainnet. However, I think that has not resulted in the same sort of fee generation for Ethereum stakers as it was previously. As a result, in the early part of this year, we saw Solana overtake Ethereum actually in terms of the fees generated to its stakers. I think that's quite a significant event. However, like I said, this is something that Eamon and I have been thinking about for quite a lot of our time recently. And I think we are possibly about to see some at least short-term tailwinds. Maybe Eamon can share a little bit more about them.
Yeah, sure. So the theory here is that is there any near-term tactical factors that could lead for Ethereum to catch some kind of a bid, specifically on Ethereum, rather than speaking about the alt season overall? I think, as Andrew mentioned, some of the factors that were leading to Ethereum to underperform is the competitive landscape into what Ethereum has entered, which is the proof of stake protocols, and the emergence of others, the like of Sui and obviously Solana. That makes the competition for the capital for these kind of projects, including Ethereum, quite intense, and you see it reflected in the price. And of course, it's some speculation out there that some of the reasons why Ethereum has been underperforming is because of it lagging the innovation that it's happening in the other protocols, and maybe this is the market's way of hinting that there's some change in the leadership of the foundation that is necessary. That's what we see in the more mature grown-up market. This is how the market drives change, by impacting the price. And potentially that could be the case also here for Ethereum. The question is that how much of that, all of this has already been priced in, and what it means for for the price in the very near term. And we just think, purely from a tactical trading point of view, the risk or the probability is perhaps skewed towards kind of Ethereum outperformance, especially after the recent flash crash that we saw, and which in my mind probably washed out a lot of the kind of weak longs or weak hands. So overall, tactically, we think that might be an opportunity for, on a micro level, for Ethereum to outperform, and this is purely a relative value type of view rather than medium-term assessment of where altcoins should be versus the Bitcoin, or where are we in this kind of altcoin rotation cycle? Where are we in that cycle? I'll just wrap up my answer with this. I mean, we always say that history might not repeat itself, but it echoes. So we have seen these moves in the past in terms of shifting from Bitcoin to altcoins, and we question ourselves, what are we going to see the same this time around? It might be the case that there isn't a rotation as such, right? Where actually whatever slack that we get in Bitcoin gets completely consumed. Sorry, just 1 second. It gets completely consumed by these new buyers in the space, be it central banks or corporates that are adding Bitcoin to their treasury, etc., etc. And whoever sold Bitcoin to buy altcoins shift the capital into those. So we might not actually see a rotation, but we just get a wave of everything is kind of shifting higher, or at least Bitcoin staying where at these levels, and we don't see as much of a drop in the market capitalization of Bitcoin, if that makes any sense. Sorry about that, by the way.
Yeah, thank you so much. No problem. That was really great explanation and analysis, actually. That's a great question. I understand that. I think Eamon actually needs to run pretty quick already. So if you guys do have a very burning question, please drop it in the chat box. Otherwise, we still have Andrew and Benny. Again, thanks, Eamon, for sharing your insights. Okay, now that we actually have covered both Bitcoin's dip and also the potential for alt season, let's just get into the practical side of things. How can traders navigate this market without getting wrecked? Whether you're holding Bitcoin, looking to rotate into alts, or just trying to figure out when to jump in, it's all about managing, having a solid trading strategies. So let's talk about the best way to manage risks, spot opportunities, and make smart moves in uncertain environment. So let's just start with something very simple. How can someone even tell if an alt season is happening? It's easy to miss the sign if you're new to the space. So what are some of the simple indicators traders can watch to spot the beginning of an alt season? Andrew, do you want to take this one?
Yeah, absolutely. And I related to my answer previously. I think watching proportion of Bitcoin market cap, talking about this in terms of Bitcoin dominance, I think watching the performance of altcoins relative to that, and then also paying attention to narratives. I think narratives can often be an event that precipitates a wider flow into altcoins. So previously we had seen DeFi summer in, I think, one of the previous cycles. This was not itself the event that caused altcoins to rip relative to Bitcoin. However, I think DeFi in that case was one of the subsectors within altcoins that really outperformed. So the question, I think, that goes alongside when is how or what is actually going to be one of the leading things the early part of an altcoin cycle. We've had a lot of narratives already, and none of them seem to have been the key event that people have been waiting for. The reason we're still asking when altcoin season is because there has not yet been an event that has driven it. So some of those previous events have been the meme coin super cycle in 2024. But also, I think more recently, AI agents have been a very popular narrative, which then subsequently sold off very quickly. So in terms of advice, I would say be very careful in buying into a narrative too early. But I think the presence of narratives, full stop, is one of these things that leads to potentially a rotation into other assets.
Before you guys continue, if I just step in to just say thank you very much for having me. This was a very insightful conversation. We really appreciate it. And if there's any other questions for myself or for Blocksholes, please feel free to forward it later on to me. I'm happy to respond with an answer as and when we can. But thank you very much, and I'm really sorry that I had to step out.
Yeah, cool. Just a reminder for everyone on the line, the live stream is still on. Just Evan have something urgent that needs to attend to. We still have Benny and Andrew on the line. Okay, following by the next question that we have, with Bitcoin correcting and altcoin season possibly around the corner, traders are facing a lot of uncertainty right now. So what exactly is the best approach for protecting your portfolio while still taking advantage of the market opportunities? Benny, do you want to share some insights?
Yeah. Okay. So I think that Andrew did cover a bit about like the fundamentals, right? Like how you think, how you don't buy the narrative so quickly. So I think I want to cover more on the trading aspect. So what this means is things like risk management, right? And this is not anything too advanced. This is like trading 101. When you get into a position, you don't want to get you want to get your all your capital in at once. You want to slowly scale it in. You want to use things like stop loss, right? Just in case if the price action goes against what your initial hypothesis is. You want to have some form of hedging strategy, and depending on your skill level, you want to employ maybe some form of derivatives doing so. Things like from expiry futures to your perpetual futures, or if you are more advanced, you can do buying a call or put option. And if you are really expert at the game, you can even sell options as well. Although I don't really advise this for anyone beginning trading crypto. And also what Andrew has covered a lot, which is that don't forget about diversification, right? Balance your holdings. You wanna mainly have the less volatile, less risky assets as your primary assets. Things like your Bitcoin holding, right? And your altcoins being a minority of the assets. And last thing you really want is to have a bag full of meme coins where you degen in 100%. I think that's the worst strategy of all. And I think on Twitter and social media, we've seen a lot of pretty sad stories over the last 2 weeks on a lot of people getting burnt by meme coins. So yeah, keep all those things in mind.
Yeah, Benny's exactly right. I think, yeah, what Eamon often tells me is that trading is not about having the right idea. Anyone can have the right idea. Trading is about risk management. So your point about derivatives, exactly agree. I think we are derivatives focused at Blocksholes. We're named after the option pricing formula by Black and Scholes. I think what we really love is options. We love thinking about them. I like options for exactly that point, not for the leverage, but for the risk management. What I love about options is the complete flexibility in expressing the view that you have on the market. Now, if I have a view that, say I'm bullish on a particular asset, then the obvious case is that I can buy the spot asset and then I'm exposed in both directions. However, what I like about options is that they give you the ability to fine tune the view that you would like to express on the market without paying up for exposure that you don't really have a view on. So think of the example of a call option. Say I'm bullish on an asset. I don't think that this thing is going to stay still, but I don't really want to pay for it selling off. by buying a call option, I know exactly what my outgoings are. I know what my loss is. My max loss is the premium I've paid for this option, and I still get exposure to that upside. Now, you can make that even more custom by some combination of call spreads or put spreads. Essentially, if I have a view that something is going to rally, but not that much, then I can sell a call option alongside my my long call option, capping my upside, but then cheapening my entry point. My max loss is still the premium or the net of the premium that I've paid. And I know exactly how much I stand to win if I'm right about my view. The same happens in reverse. If I'm bearish on an asset, then a put spread works exactly the same. Finally, I love options for the way that you can trade views that are not necessarily directional. So, okay, I am bullish Bitcoin or bearish Bitcoin. I have this view. Okay, I can trade that using spot or perps or listed expiries, like you said. But if I don't necessarily have a view on another asset or even on Bitcoin, but instead I think I have a view on how volatile it will be over the short term, then options allow you to take that exposure as well. So really a multi-dimensional asset or instrument, which unlocks a lot more levels of risk management, especially when combined with a portfolio of other instruments and assets.
Right. I think you guys cover a little bit of the options already, but actually a lot of people think that they need to jump into every altcoins to actually make money, but that's not always the smartest move. And what exactly is a good and simple approach for users to start looking at altcoins without taking on too much risk? Would options be a good case to get started?
Absolutely. But for altcoins, I'd say the proposition is a little bit simpler than learning options theory. I think understanding the risk distribution in the first place, without which the risk management is not any use, right? Not all altcoins are created equal. What we hear a lot in crypto is do your own research, and I'd really stress that here. Like you said, we've heard a lot of stories of people being burned by meme coins in the recent past. I think what we'd advocate for is looking at altcoin markets like any other market. In equities, the way you'd analyze the market is by looking for value, because the market rewards that over the long term. So finding altcoins with real fundamentals, making sure that you really understand those fundamentals and why this thing should have value, and then making sure that you understand the risk that you're taking. I think taking risk is absolutely fine as long as you are able to quantify it with things like stop losses or even with hedging strategies in options as well.
Right. So just a very last question. One of the biggest mistake for a lot of new traders is FOMO. So fear of missing out, right? When prices starts to rise, especially. So what exactly are your advice for avoiding FOMO and making smarter and more informed decisions when altcoin season starts heating up? Benny, do you want to take this one?
Yeah, certainly. This one hits home because during my early trading days, these are all tuition fees, getting burnt by meme coins, getting burnt by high risk altcoins. So I think avoiding FOMO to me now is really sticking to your guns, sticking to your data, and don't trade on emotion, right? As covered by Andrew earlier on, like study the narrative. Don't buy everything you read on the internet or what people say, because most of it is just paid chill. You gotta rely on like objective indicators, things like your on-chain metrics. If you do trading a lot, you can use like technical indicators, fundamental research as covered earlier, and things like social media. Also, from fundamentals perspective, you want to stick with quality projects. All right, you study the team, you study the GitHub, you study what they have to offer in terms of value, rather than how many people or how many followers are shilling the project. There are many good projects out there, but I think that a lot of them are under the radar. Quite a number of them have survived through multiple number of bull and bear cycles. You just got to be able to find those needle in the haystack. And from the long-term perspective, I think you've got to keep this in mind. When you find a good project, time in the market beats timing the market. All right. So I think that when you do find that you have a good project and you see that you're constantly providing value, you just got to just buy and hold, and maybe turn off your computer. Don't trade for the next 6 months or something. But to me, I think that's worked generally well for a lot of people that have found a good project, but they just can't stomach the volatility. So yeah, so with a disciplined approach and with a proper trading plan, I think that you can sidestep impulsive decisions and make your moves smarter.
Right. Just to reiterate, if you're trading on emotion, just shut your laptop. Don't trade for 6 months and then come back later. Okay, cool. Actually, we covered quite a lot today, and now let's just look at the chat and what are some of the questions that we can answer. Maybe we'll just pick a few questions due to the time constraint. I actually found one. Someone asked, is it better to trade actively during the off season or just hold long term? Andrew?
Yes, very good question. I think it really depends on a multitude of factors. Firstly, your experience as a trader, your type of investing or trading, but also the project as well. This is an incredibly volatile market, and altcoins even more so, right? So trading on that volatility can often be very misleading. A lot of that volatility will be white noise over the long term. Now, Bitcoin is one of the best examples of this. Look at where we are today. Look at the pullbacks in spot price that we've talked about over the last hour. These things have ultimately been short-term moves, but a lot of people have been shaken out along the way, selling on those dips, buying the highs. I think a more sensible approach is needed. I think one thing that really drives a lot of these short-term shakeouts is over leverage. I think we saw quite a large level of liquidations in the early part of this year as well. So sensible risk appetite, but also time in the market, exactly as Benny said. You can be right about your view, but at the wrong time and still lose money. So I think avoiding that fear of missing out is important, particularly online. I think it's very easy to see people posting about trades that they've made. That I think drives a lot of that fear of missing out. But remember, people are far less often posting about the trades that didn't go well. So it is a little bit of that almost like Instagram effect, of trading.
Totally agree. But I was also seeing like another question in the chat, Marius. He's very concerned. So basically he's asking what's causing Ethereum to lag and can it recover?
Very good question. If I knew the exact answer, I wouldn't be sitting here. I would be going and making that trade. What's causing it to lag? I think possibly I could speculate on a multitude of factors. I think primarily this cycle has been very much, even more so than previous, focused on Bitcoin. Bitcoin has seen a lot of the love from institutions. It was the first to get an ETF. It was the only one mentioned by, it was the only one with a conference that President Trump spoke at. I think is a lot easier. Bitcoin is a lot easier for institutions coming into this space who are learning about this space. I think it's a lot easier for them to understand the value proposition of something like Bitcoin. It has this very nice tagline of "it's like digital gold" or "it moves like a tech stock." Whereas the distinguishing features of Ethereum, I think, maybe suffer a little bit from an education problem. But also, I think there's not necessarily anything to say that this will continue over the long term. If we look at previous cycles as guidance rather than a menu for what's going to happen, then this has happened previously. Ethereum has underperformed earlier in a cycle and then outperformed a lot later. So I think there are pros and cons for the Ethereum case. I'm not necessarily shocked by its performance over the last, say, 9 months or so. And I think there are reasons for and against it changing in the near future.
Okay, cool. Thanks for sharing the insights. Anything you'd like to add on, Benny?
Yeah, so if I may add, Cointelegraph came up with an article either yesterday or 2 days ago, depending on which part of the world you're at. And I think they were doing some, there was an article, I'm not sure whether you could see it on my phone, but they were measuring the amount of leveraged futures short for the Ethereum symbol. So I think that although this doesn't exactly tell us why that they're doing it, it certainly does give a hint, the play of the hedge funds, where the hedge funds are currently positioning themselves with Ethereum. Why is there such a huge leverage futures short for Ethereum? I don't have an answer. But I mean, if I were to put on my conspiracy hat on, and if we were to just predict in 3 to 6 months' time when the Ethereum ETF was to come on board, I think that it stands to reason that if I'm a hedge fund with the capability, I'd want to get my Ethereum on cheap. And I'd do this by suppressing the price down as well. But this is just me being a conspiracy theorist saying it. So yeah, it's very strange why there's a huge leverage short for Ethereum. There is no fundamental reason. I find that Ethereum should be this low relative to the rest of the altcoins. But there is yeah. Go ahead.
Sorry to interrupt. Yeah, I think I would offer an alternative to the conspiracy theory, although it's tempting. I think the short positions, particularly in CME futures, are potentially signs of a sort of carry trade in Ethereum, where hedge funds like to take risk or relatively lower risk strategies, taking advantage of the spread between futures prices and Ethereum spot. So potentially this could be an example of hedge funds being short the future and then long either spot or the ETF in order to take advantage of that spread. I think that would show up on the charts in the same way as a big short position, and I think does align with a lot of the inflows into ETFs that we've seen in the early part of this year as well for Ethereum. Yeah, one of the third largest inflows in Ethereum's history, I think, was during the flash crash. So definitely a mixed bag of data. I think potentially these futures positionings are less indicative of informed positioning than I'd like. However, I think, Benny, to your point, I think there are a lot of other signs of positioning against Ethereum in the same way by those same hedge funds. So maybe not in the CME futures, for example, but in other derivatives metrics as well, like in options or in perps as well. We've seen the funding rate of Ethereum's perpetual far lower than Bitcoin's. It has still been positive, but it's a sign that something is pushing that price a little bit down.
Okay, cool. Thank you so much, guys, for taking all of the questions. Yeah, we've definitely covered a lot today, and a very, very special thank you to Benny, Andrew, and Eamon for taking the time to sharing their insights with us. So to quickly recap, we actually explore how macro events like trade war are shaking up Bitcoin, whether out season is around the corner, based on Blockshow's research, and how they stay smart in uncertain markets. There's definitely a lot of things about how we watch the markets and unfold in the upcoming weeks. And of course, please note that this is meant to be not meant to be a financial advice. So the topic discussed are purely for educational purpose only. So yeah, actually, thank you everyone for tuning in today, and also to our panelists for joining us today. So for more information, please visit our website, Bybit Learned, and don't forget to connect us on social media. And we also have some exciting new projects that are coming up on Bybit, so just keep a lookout. And lastly, let us know what are some other topics you would like to hear from us, and we'll see you at our next live stream. Stay tuned on our social media platform for more updates. So again, thank you everyone, and thanks again, and see you next time.